ETF Capital Markets has two main parts. So the first part is advising clients on how, when, and with whom to trade ETFs. So there's a big difference between ETF and mutual funds. Mutual funds, you only trade once a day versus NAV against the asset manager. An ETF, you can trade 24/5 on risk or versus NAV on different venues against different counterparts. And essentially, that's a substantial reason why the ETF Capital Markets person exists. Now, the other major point we're looking at is measuring liquidity. Measuring liquidity can be quite challenging in the UCITS ETFs due to the fragmentation between different trading venues. An ETF often possessing multiple share classes, trading on various exchanges, and being listed in different currencies. The ETF Capital Markets person must help the client navigate this ecosystem so we can take advantage of the wrapper. And the wrappers and advantages really are intraday liquidity, holdings transparency, and certainty of execution. The other part of our role is really working with our colleagues in product development and portfolio management to improve the architecture of our ETFs. So our APs, traditionally the global investment banks and the proprietary market makers, can price our ETFs efficiently. Another key point, in mutual funds, the client would trade directly against the asset manager. In an ETF, the client will never trade versus us. They trade on exchange, on MTF, so that's the RFQ like Bloomberg or TradeWeb, or OTC by the SI regime. I wouldn't really say there's a typical day. As often the challenges and tasks can be quite varied. A lot of my time is spent answering client queries on how to measure liquidity, when to trade, the expected bid-ask spread for any selected execution strategy, and who to trade with. In addition, there are tasks often associated with the second part of our business, i.e. enhancing the primary market infrastructure. They can be as mundane as checking PCFs, so the portfolio composition file that APs use to price our ETFs, to as more interestingly, perhaps improving the execution processes for, say, restricted currencies to ensure tighter NAV spreads on our ETFs. Increasingly, one observes in this space mostly ETF traders joining the ETF capital markets business. It kind of makes sense because as an ETF trader, you'd have quite a deep knowledge of the pricing process for an ETF, the types of hedging strategies involved, and how a client can achieve best execution. The other advantage of perhaps a sell-side background is you may already have connections with the traders at other investment banks and proprietary market makers, will often be the APs in your ETF business. The APs are the only institutions who can create and redeem ETF shares in the primary market through an AP agreement. Three skills jump out to me. Analytic and quantitative, so you can understand ETF pricing strategies and hedging techniques. The second one is the ability to simplify often complicated processes so that all stakeholders can understand what's the best way forward. And number three, interpersonal skills. You are going to be presenting to clients at meetings, conferences, etc., on how to trade ETFs. Can be quite varied, but I'd say the sky's the limit here. It is a healthy mix of sales, product development, portfolio management, but also with that specific skill set of ETF capital markets person, i.e. ensuring the operation of the primary and secondary market. Because again, in a mutual fund, client trades directly with asset manager versus NAV. In an ETF, the client will not be trading with us. So you need to make sure the front to back works seamlessly.